In August 2024, global financial markets faced one of the most significant crises of recent years. The unexpected interest rate hikes by the Bank of Japan and uncertainties surrounding the U.S. economy led to a sudden and severe crash in global stock markets. This downturn affected not only investors, but also the global economy and the livelihoods of millions. This article delves into the causes of the August 2024 stock market crash, its impacts on the global economy, and potential future consequences. Japan's unexpected interest rate hikes were one of the primary triggers of the August 2024 crash. The Bank of Japan, which had maintained a low interest rate policy for years, suddenly decided to raise interest rates. This decision raised concerns that Japan's economy, which had been financed by low-interest debt for years, would struggle to manage its debt burden. The Nikkei 225 index in Japan dropped by more than 12% following this decision, and other Asian markets were similarly affected. This situation caused a loss of investor confidence globally and led to widespread turbulence in financial markets. Economic uncertainties in the United States were the second major factor in the crash. Throughout 2024, the U.S. economy grappled with rising inflation, slowing growth, and uncertainties in fiscal policies. The possibility of the Federal Reserve raising interest rates further unnerved already fragile markets. Major technology companies, in particular, were negatively impacted by rising interest rates, and their stock values plummeted rapidly. The significant losses in market capitalization of giants like Amazon, Apple, and Google accelerated the downward spiral in the markets. In addition to these two main factors, the slowdown in global trade, geopolitical tensions, and fluctuations in energy prices further deepened the crisis. Trade disputes between the U.S. and China, as well as the energy crisis in Europe, reduced investor appetite for risk. This led to massive sell-offs of stocks and other risky assets worldwide. The effects of the August 2024 stock market crash were not limited to financial markets alone. Many countries saw their economic growth negatively impacted, and millions of people faced the risk of losing their jobs. Developing countries, in particular, were hit hard by the crash. Fluctuations in currency exchange rates weakened the economies of nations with high debt burdens and increased inflationary pressures. This situation led to significant increases in the prices of essential goods such as food and energy, causing social unrest in many countries. The August 2024 stock market crash also offered important lessons in terms of financial regulation and global economic governance. In the aftermath of the crisis, many countries advocated for tighter regulation of financial markets and greater transparency in central bank policies. Additionally, there was a strong emphasis on increasing international cooperation and making the global economic order more sustainable. In conclusion, the August 2024 stock market crash once again highlighted the fragility of the global economy. The sudden interest rate hikes in Japan and economic uncertainties in the U.S. triggered a major crisis in global markets and affected the lives of millions. This crisis also underscored the need to reassess the financial system and build a more resilient economic structure. How the effects of this crash will be managed and how the global economy will recover in the coming years remains a matter of great importance for the entire world.